right. Hi, everyone. Megan Marsh here with Collab, Collab Lending Franchise, Collab Concierge, and we're on the Lab YouTube channel. And so today we're going to be talking about the age-old argument or question of, do you work in retail or should you be in the mortgage broker space, the wholesale space? There's so many terms for both of them. So what we're really comparing so that you understand is, do you work at a bank? Do you work at a retail lender, which is a little different than a bank, but still is lending their own money? Or do you go over into the wholesale side, which is a mortgage broker model? And this means as a loan officer, as a mortgage broker owner. And so this Friday, I'm going to be talking about the differences between the two, the things to think about, to consider. I'm going to share some recent articles with you about this topic. And I'm going to go through these differences so you can understand them, because next week, I'm going to bring in one of our new broker owners. He is a loan officer who was working in retail for the last 3 to 5 years. And he joined our Collab network and is just waiting for his license to be officially live with the state that he is opening in. And you're going to hear feedback from him. And he specifically wanted to come and talk about the difference in the income that he's making compared to when he worked on the retail side. Now, I know for any of you that end up listening to this, if you worked as a loan officer in retail, or if you worked as a branch manager in retail, you might be thinking, well, it's a little different, right? If I run a P&L. And so I'm going to address that. And one of the articles I have addresses that too. So, let's just talk about some of the general differences, because there is a difference. And I always like to say that there's no side that's 100% right for any one person. And this is where you have to do your homework, and you need to also make sure you listen to the right people. That's probably one of the biggest mistakes I think that our industry does, is we don't talk to the people who are sitting always in the shoes of where we want to go. We listen to people that maybe are in the shoes we're currently in that we're trying to get out of, right? Or we listen to a family member or a friend who isn't in our situation. Like, if you want to change something and you want different outcomes in your business, you need to talk to people who are getting the outcomes that you're trying to get. So if one of those outcomes is looking at going over to working on the mortgage broker side, make sure you talk to some mortgage brokers, right? And so let's go through just a couple areas that are very different when you are in the two different sides. So the first one is licensing. So when you work at a bank or at a retail lender, you mainly really just know what you need to do with your personal license, your individual NMLS license. And if you run a branch, then you usually will have an idea around your branch's license, especially if you're having to get licensed in other states. And you have a team maybe on the back end that's helping you. Once you flip over to the mortgage broker side, if you're a loan officer, it would be the same thing. But if you open a mortgage brokerage, now you need to learn, at least at an entry level, you need to understand a company license. That's what makes you an owner. When you own the company license, not a branch. Anyone who owns a branch, I don't care if it's a broker branch or a retail branch, you do not own the business. Yes, you have a business within a business, but if the company license ever something happened, doesn't matter. Your branch would also have the same issues as your company's branch, as your company's license. So as a broker owner, you have to at least make decisions around the company license. Now, I'm going to say, for any of you thinking about becoming a mortgage broker owner, the licensing is the number one thing, one of the top 3 that I would recommend you outsource and get help with. The reason is, your company license, managing it, it's tricky. You've never done it before. It's not something you're going to do a lot. Hopefully you're only going to apply once, and then you just have to do renewals. But it's not something that makes you money, and it's not something that you have to do often. And so I see a lot of people to try to save, $1,000, $1,500. They try to struggle through submitting and trying to get approved in challenging states, and they get stuck. And then it takes longer, where if you just get help with the licensing, you'd be able to focus on loans. It's like, would you do your bookkeeping? Would you go in and do your QuickBooks? I hope you'd say no. You'd get an accountant, a bookkeeper to do it. It's the same thing with licensing. So that's the biggest difference when it comes to licensing. Then when it comes to products and rates, it really depends. Like traditionally, the mortgage brokers, loan officers, and mortgage broker owners traditionally have lower rates. And there's a reason behind this. And it's because as a mortgage broker, you're capped at the amount that you can make on a loan, and it's 2.75%. And so now you don't have to make all that much, but when you go into a bank or retail, most banks and retail lenders can't operate on a 2.75 commission into the company. And so I remember when I went into retail, when I was managing an area, and I think the conventional loans were pretty close to like 1.5, but the government loans, since they aren't capped, they were making, instead of 2.75%, they were making 3.5, 4.5%. So they were making up what they needed to make to support all the layers in retail by making more, so that they had more to run all the big operations. So for that reason, your rates are lower when you're bringing less money in. When you close a loan, the rate is going to be lower. It's also why I'm going to pull up on my screen. I have found a few articles, and I think they're important to see. So let's look at just a couple of articles that'll support what I'm talking about. I'm hoping it pulled up. Yes, it did. So this first one by Business Wire. New research concludes consumers save $10,662 when working with a mortgage broker. And it goes on and explains that an independent firm that was hired by one of the wholesale lenders examined a set of clients, and that on average, these clients saved over the life of the loan, between closing costs, interest, over $10,000. So, that's a pretty neat thing to be able to say to your referral partners, to your clients, and to use something like Business Wire to say, look, like, you really will save by working with me as a mortgage broker. And it actually is even higher. It goes on to say here in the article that if it's for minorities, that it was even higher than the 10,000. It just makes it more affordable for people to get into homes, have better rates. So for that reason, that's typically why your rates are going to be lower. Now, I'd be careful if you're going to become a mortgage broker. A lot of people come over and then they're like, oh, I can't lock at 2.75. And I want to be like, you just locked making 300 and 400 basis points. When you are in retail, you still need to earn a good wage so you can run your business. So just remember that. And then let's talk about products, because one of the biggest things, if you've listened to any of my videos on this channel, is the options. That is my favorite thing about the mortgage broker model and the wholesale side, is the options. And I know if you're in retail or at a bank, you're like, well, I have options too, right? Like I can broker through, like, at the lender I'm at, we have a division, so I can broker it. It's not the same. Your brokering is not like brokering on the mortgage broker side. It doesn't go as smooth. You don't make as much, and the options are not as deep. I'll give you an example. So if you are at a lender and let's say you have an option either on your brokering division or just a straight product, you guys have added a DSCR option for investors. Yes, you have a DSCR option, but when you're on the wholesale side, when you're a mortgage broker, you have like 10 DSCR options. Because if you get a client who needs that DSCR product, let's say they're a first-time investor, If your product doesn't allow first-time investors, you can't help them. Whereas in the wholesale side, you just go to the bank who allows for first-time investors. Let's say that investors getting gift funds for the down payment. Some DSCR lenders don't like that. Some are okay with it. Let's say credit scores or the DSCR ratio. What happens if your appraisal comes back and your DSCR ratio is below what your product wants? Let's say it wants a 1% and your appraisal comes back and you have a 0.8%. Well, the deal's dead. Well, not in the broker side. You have lenders who will allow for lower DSCR. Some have no DSCR ratio required. So that's a big difference. And that's why I always say you can close more loans when you work on the broker side. So when you can close more loans on the broker side, when you're saving your clients money, then do you make more money? Like, can you make more money? Do you make more money? And that all depends on who you are, where you work, the model you're in. And there's a lot of pieces that go into this. So just looking at a comp plan is not the best decision if you're a loan officer. I know for a lot of loan officers out there, when you look, I'm sure, like looking at some of the broker branch models out there, there's a lot of them now where when you close loans, they just take let's say a flat per fee per file or a set amount of BIPs per file. Okay. The thing you have to know and remember is that you're used to having a lot of support on the back end. You want to make sure if you're going to go into that model, that you're in a model that has the support you need to get comfortable as a loan officer in the broker model. And otherwise, you're going to get frustrated and go back. I would say you can find a brokerage to work at that has the same comp plan you have right now. So in that case, would you make more? I think you'd still make more on the broker side because you'd have more options. So you'll close more out of 100 clients you get sent. I believe you'll close. I know you'll close because we've tracked it. I know you'll close an extra loan a month. So you'll make more that way. Now, what about if you are a branch manager in retail or on the bank side compared to owning a brokerage? Depends on how you run your brokerage. I help many broker owners who have been a year into being a broker and they're frustrated because they don't have any net profit in their business. And that's because they're not operating it the most efficient way or the most profitable way. So there are best practices and there are good ways to do it. I'm going to bring up an article that I found that will link here in the description. And let's see. It's a great, great article. And it's by what's called the Stratmore Group, which is an independent research firm that helps mortgage companies. And it says, thinking about wholesale considerations for mortgage originators and lenders. And so it goes through, first, it just talks about the channel and how there's, how the brokers used to make up half the market. Then it changed. Now brokers are now making up about 25% of the market, and it's supposed to continue to increase, which is really neat. Let's get down to the part, though, that talks about who makes more money, because I think that's what we all want to know. And here, this is what I'm going to recommend you come back to, because it even has questions for you to ask yourself. So what's the earnings potential? How much responsibility will I have? Do you have to manage others? Do you work independently? Do you have flexibility? All those types of questions. Then it does an illustrative model of a branch manager in retail compared to a broker owner. And what it does is it says if the average loan amount is $300,000 and each person is closing 60 units, and it says that the commissions paid out to loan officers is 110 basis points. So if you're getting paid 125, 110, it wouldn't matter. They're making sure everything's the same. But if you keep going down, it starts comparing things like, right, it's deducting out processors, which that's one thing I'm going to come back to. It's deducting out, you're going to have to pay for technology, loan expenses, marketing. You're going to be paying fees to your corporate parent, which is the big piece that comes out of retail that doesn't come out of the broker side, but they do put something in there for, hey, you're going to have legal compliance, some HR expenses. And then they put it into dollar amounts, and they show that the retail branch will bring more in off that same volume than the broker. Here's the LO commissions being equal, processor salary. And after they deduct everything out, the retail branch makes less than the broker. The thing I want to point out, though, is if you're a broker owner, there are a number of tricks to get this number even higher. One of those most of you have probably heard of, which is contract processing. So where it says processor salary, I would remove that from the broker owner side because that's a smart thing to do when you're getting started, is to use contract processing. And if you have a processor, you can reach out, and your processor a lot of times can work at a contract processing company, but they can still work with you and on your loans. And so there's ways that you just got to get smarter than the system that you were in. If you can be smarter with the money, because now you're getting 100% of the checks, if you can get smarter with your money, and if you can have low overhead, you will make more as a broker owner. I think you will even make more in a broker branch model. That's the right model for you. And so I do believe overall, yes, there are some of you that might make more in the retail model. If you're at a bank that maybe gives you everything under the sun, but it all comes down to, are you okay walking away from this business you built at the end of your career? Or do you want to be able to have your kids take it over? Your team members are able to take the business over. You can sell the company. You can build other businesses onto it. I think that the earnings potential is definitely higher when you become the entrepreneur. It's not for everyone, though, because not everybody wants to do the business operations, but that's why we have broker concierge. So if you don't want to do the operations, you can outsource it. Don't even have to hire in-house. And that will help keep you lean. That will help you be able to focus on doing more loans, making more money, and letting our team that's experienced with operations take that off your plate. So next week, I will be bringing a loan officer in who switched from retail to broker, and we're going to ask him his experience going through this exact shift and change so that you can hear how different it's been for him on the broker side in the ways we've just talked about, but especially when it comes to income. So thanks for tuning in today, and we will see you guys next Friday.